The November beginning of the taper is really a done deal. I mean, something quite extraordinary would have to hit the economy to push the Fed off that course. In terms of the first rate hike, being maybe at the end of next year, maybe early 2023, a lot can happen between now and then. So that is going to be very dependent on what happens to the economy over that time frame. At the moment, given the forward guidance today, the Fed does look to be indicating towards the end of next year or maybe early in 2023.
The Fed indicating that the tapering likely to be done by the middle of 2022, and that surprised some people that it will actually be quite rapid and the reduction of asset purchases will happen at a fairly speedy pace. Did that surprise you at all?
Not too much. I mean, I think... given I think what the inflation picture is looking like, I mean, between meetings, between the last summary of economic projections, clearly the inflation picture has shifted a little bit. The Fed is sticking to the view that it's still the higher inflation is transient. But I think given how tight the labor market is looking, they're starting to perhaps shade their confidence on that view. So I think the slightly faster pace of tapering kind of reflects a bit of hedging on that position.
Paul, down here in Dubai, of course, a lot of the outlook really depends now on the labour market projections, particularly when it comes down to the jobs report and the employment number. Give me your insight on what you expect to happen here. Powell says basically the threshold has already been met, but what are we expecting to see in September and October, and could it change the narrative for the Fed?
Well, because the November FOMC meeting is actually before the payroll numbers will come out for October, they'll only get the September reading on payrolls between now and then. So not a lot of labour market data to really shift anything there. But, what did come out, again, clearly from Chair Powell's conference today was the idea that obviously with inflation running, well above target, albeit expected to come down, the Fed is not going to have any problem in terms of meeting the inflation condition. What's all going to be about around the labour market. And, of course, with the new framework, they've really committed to the fact that they'll wait for the economy to hit full employment. They're not going to look for full employment. They're going to actually witness full employment before they make a move on interest rates. So Chair Powell again today did say an interesting point that in the short term, at least, there does seem to be a little bit of a conflict between the inflation goal and the employment goal. That's normally not what they expect to see. And they're really hoping and expecting that conflict, if you like, to be resolved as labour shortages are cleared, as markets start to normalize. But if we don't see that happening, if we see this continued labour market tightness and high inflation, that's going to throw, the Fed a little bit of a curveball. So that will be the thing to watch for in coming months.